Okay, good morning there. What's up? How are you doing? Maybe Igbo neighbor Igbo now, so I will mix it up. I will use Igbo and English for better communication. So there will be some noise in the background. I hope it will not affect us that much. Okay, now I believe you already know the basics of forex. That is, by looking at this, you know the names of these candles. So as you can see here, I focus just on two pairs, Euro USD and USD JPY. Okay, so but yeah, that is advisable for one to focus on. Some people focus on one, some focus on two, some trade four, five. It depends on your capacity, but I just choose to go with two. So as you can see here, I have done my analysis in this thread. I do start my analysis from most times monthly time frame, most times week, most times weekly time frame. So starting the analysis from the bigger picture, that is what we call the top down analysis. You have the general movement where the market is going, then you can be able to make your decisions from the lower time frame. So but for the sake of what I want to do now, because I have done my analysis in these two pairs, so I want to add another pair, so I will do a fresh analysis there. So let's go with GBP JPY. I hope you know how to use this trading view. You have it in, like you said, you don't have a laptop, so the difference is just that the laptop will just show you the big picture of the market, but the things you can do here, you can also do it with your phone. But laptop is more comfortable, you understand, but you can still go with what you have at the moment, but make sure that to get a laptop is part of your agenda, part is in your budget. So now if you come to this market, this chart, GBP USD, the first thing you have to decide is for you to know the movements of the market. Is it a trending market or a ranging market? I sent you something on WhatsApp. Oh, my WhatsApp is not connected yet. Okay, after I connect my WhatsApp, I want to show you something. So as you can see, this market is an uptrend now, because this is a higher high. You know what is higher high now? We can see okay, we can see a high here. You can see a high here. You can see a high here. You see a high here. You see a high here and another one here. You see another high here, and we can also call this one is another high. This one is another high here. This one is another high, and this one is another high. This one is another high, and this one is another high. So you can identify, I believe this is another high. Yes, this one is another high, and the present high at the moment, which is this. So you can see the market is moving upwards. That is an uptrend. You can see this one is a lower, this, and this. I hope you know what I mean by higher high and all this. So if you don't know it, do let me know, so I will, because I believe that there are some things you know. That is why I'm just jumping to this higher and all this. But if you don't have the basics, let me know, so I just want to know where to start from. So you can see this is an uptrend. This is 1 week time frame. You can see this is an uptrend. So now if you want to do your analysis here, let's take this off for now. If you want to start your analysis, you will start it from this is a weekly time frame. So in this weekly time frame, now what are you going to do? You are going to know the zones. You are going to decide the zones. Not even you are not deciding the zones yourself. You are going to just fish the zones out. Like you know what I mean by zone, where the market touch more than 2, 3, 4 times. No, that is the support. You know what I mean by support now? I believe you have this basic knowledge. If you don't have them, let me know. So you can see we can mark this out as a zone, because the market move from zone to zone. You can see what happened. Let's just leave here, because if you can see from here, just watch this date that we come here. You can see is Monday 15 May 2021. So here is where 2023 start, somewhere around there, but it's just for reference basis. So if you start from here, you mark the zones. You see the market come here, bounce here, the market touch here, the market touch here. So it shows that this is a support. Yeah, it's a support. The market is finding it difficult to pass here, to pass this zone. So that makes it a support. So you pick out the support. So then if you come here, the last time the market touched this zone was Monday 26 September 2022 was the last time this did. So ever since then, this market GBP JPY, see it here, GBP JPY has been in an uptrend. You can see it has been going up. The market have not been able to come here since this year. So now if you mark this zone, the next thing you will check is which other zone can you see. You know, this is technical analysis. These are the things you have to do, so you'll be able to, you know, make decisions in the market. This is technical analysis. So if you come here, I think we are seeing another zone here. I don't know if you can see it. You see here, you see this, 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 you see this. So it's good for us to say there is a zone there. So what are we going to do? You mark out that zones. So why are we marking these zones out? You know, the market is moving from zone to zone. Let me reduce the volume of my. The market is moving from zone to zone. So now if you mark out this zone, let me reduce this small. You mark out this zone. So how many zones have we marked out so far? It's 2. Let me keep it here. Okay. Let me just keep it here. You mark out these zones. This one touch it, this one touch it, this one touch it. So now after marking it out, you check, are we seeing another zone? The zone is where the market touch more than 2-3 times. So you can see something is happening here also. So you mark it out. You do what? You mark it out. Keep it here. Okay. You mark it out. So if you come here, are we seeing any other zone? Yes. You mark it out. This is what we call top-down analysis. You start from the bigger time frame. You mark all the zones out. I don't know if we should consider here a zone. You touch just here and just here, but let's consider it a zone also. You mark here out. Now we come here, you see it's obvious. It's obvious. Let's keep it here. Let's just sweep the weeks. Oh, should we keep it at the week? Okay, let's spread them. So now these are the zones we are able to mark out from the weekly time frame. Now if you zoom out, you see the candles. You can see the market came here, bounce, go up, bounce, it came down, it was unable to pass here, so the market is still in an uptrend. Now we come to daily time frame. If you come to the daily time frame, this is what we are seeing now. You see those zones? You see those zones we marked out. So now from the daily time frame, this is what we have. Let me remove this high. These are just some of the things we consider before taking a trade. Now if you look here, I hope you know the patterns, head and shoulder patterns, and double top and double bottom. So one of the things you'll be checking out to see is these zones. You will check what is happening in the zone. If you mark out your zone, now you see the market came here, touched this, and it went up. The market came here, touched this, and it went up. The market came here, touched this, and it went up. So these are happening on the zone. So now if you are familiar with candles, the candlesticks, you know this is a hammer. I believe I taught us about hammer, and I said once hammer formed, or the market is showing that the market is in a bullish condition. So now when you see this hammer formed in a daily time frame, see this hammer here, let's circle it. When you see this hammer here, when you see this hammer, I hope you know what I mean by hammer. When you see this hammer, just this one, formed in a daily time frame, what are you supposed to do? Now if you come back to, let's check something now, let's identify this hammer. If you come to 4 hours, let's come to 4 hours and identify and know if we can see that it should be this side. Okay, you can see the hammer here. Once you identify the hammer in a daily time frame, then what you will do is you will take your trade in 4 hours or 15 minutes time frame. No, you don't want to take your trade in the bigger time frame because of the distance. Your stop loss will be too, it will expand your stop loss. Even some people, or most times, I take my trade with the 15 minutes time frame. Now if you see the hammer here, after the hammer might have formed, you wait for the hammer. After the hammer has formed, wait, let me remove this. Once the hammer has formed, mostly in the daily time frame, or even here in the 4 hour time frame, after the hammer, you enter your position here. This is just the basics, because there are some other things I'm going to teach you, other blocks and all that. So once the hammer has formed, your entry will be here, let's say, because you will be targeting the next zone. Once we draw the zone, if we are to draw the zone here, because your take profit should be decide, you will not just decide your take profit, you decide your take profit based on the other zone, because the market move from zone to zone. So what am I trying to say in earnest? So the thing is, if here is, because if we are to mark this zone now, here will be another zone. I hope you know what I mean by marking zone. And mind you, we are not seeing these things. When this is happening, this we are not seeing there. We are not seeing from here. We are not seeing them yet. So now here will be your zone. You know that this will be zone, this will be zone. You will mark this as zone. You mark, by then you have already marked this out as zone. You have marked this out as zone because of this 1 2, though it's not that much, but you will, your take profit will be, the deciding factor of your take profit will be any of these zones. So if you mark this as zone, you mark this also as zone. You can see here is more. I can even decide to make here more of zone than here. So if you, I pressed something but I don't know. Okay. Here will be zone. You see, here will be zone. Here will be another zone. If here is to be zone, mind you, we are not seeing this side. I could have cut it off, but let me just finish what I'm saying. So we are not seeing from here. Now, if once we have seen this, after the hammer might have formed, you will wait for a bearish candle to form. So after the bearish candle might have formed, your take, if we are, this will be your, if you have to take the trade, or even if you come down to 15 minutes, but let me use 4 hours for this explanation. So after this, then your patience will help me to know if you are conversant with some of these terminologies that I'm mentioning. So now, if you are to take the trade, if you are to buy after the hammer, that means, that is, remember I said you have to wait for a bullish candle to form. So let's say after this hammer, then this candle formed, then this one formed, then you can enter this trade after this one formed. Or some people enter after the hammer. Once immediately after the hammer, it's good to enter the trade, but sometimes I used to wait for me to see a bullish candle. Sometimes I don't used to wait. So if you enter this trade, if you enter here, and if you have to put your stop loss under this, below this, and your take profit should come to the nearest zone, which happen to be this one. Remember, we are not seeing here. To the nearest zone, which happen to be this one. Now you can see the risk to reward here is almost 1:1, or let me say almost 1:2, which is the risk to reward here, almost 1:2. So now, based on your capital, you know this stop loss here is huge, is a huge stop loss. So based on your capital, you can use 0.1 or 0.2 in case. But if you are, there is what we call a position size calculator. So with time I will go more deep. I just want to use this video to know if you know some basic things, and by the type of question you will ask, I will then know how to structure what I'm saying. So but most times it's good to reduce your stop loss. You can put it under this. Your stop loss should be under this one or under this one. So just give it some room for the market in case. You know, as we are doing this, we don't know if the market will come back. So should in case, let's just leave it here at 77, which is mixed to one of 1:5. This is what we are saying. This is mixed to one of 1:5. So now if you enter this trade, your target should be here, the other zone, or even self, even you can also use this as a target. Maybe your first take profit should be here, your first take profit should be here, then the second one should be here. So let's work with something that is realistic. 1:2. Okay, let's work with 1:3. Because I'll take profit, I'll stop loss should be under here. But most times it's advisable to put your stop loss under the support. But then if you want your stop loss to be that big, you reduce the size, the position size you will use, and a number of position you want to open. So now let's say you take this trade. You see, I told you people that once you see hammer, is an uptrend, especially in the bigger time frame, not when you see it in 15 minutes time frame. So you can see what's happening here. The market moves and the market hit our stop loss. So and the market hit our take profit, and the market is still going. The market did not come down to this stop loss. This our stop loss. The markets have not come down there, not until here. You see, not until here. The market comes down here. So now the deciding factor. So by now you have already taken your profit, but then you are seeing higher high. You can see you are seeing higher high. You know that the market is still in an uptrend. But now if you see what's happening here, after this high, the market did not form another high. After this high, the next one was you will see, we call this a higher low, because the market come down here. So let's say that you are in this trade now and you are seeing this high. So like I said, one of the things you will decide is the trend of the market. If the market is doing higher high, there is uptrend, you just focus on buying, don't sell. If some people may enter this market now to sell here, some people sold this, mostly those that did not do top down analysis. But if you did top down analysis, you will know from the bigger picture that this market is going up, that these things, let's say you take a sell now, and let's say you take a sell from here and you sold this and the market came and take you out. So now if you are seeing the high, when will you be thinking, I think this market is going to reverse? You see, this is called break of structure. We have many things to study, so I'm just using these terminologies. If you by the type of question you ask, I will know where to start from. You see this break of structure. Now what that mean by break of structure is this market is doing higher high. You can see this candle did not, there was no higher high here. Instead we see a lower low. The market came down and break this structure. This is supposed to be a high. This is a higher high. This high is higher than this. And this high no, it's too much. Yeah. This high here, you can see this is a high. This high is higher than this one. I hope you understand what I mean by higher high. It's just the market. Higher high is just when the market is going up and up. So higher high is this. you can see this. This one is higher than this one, and this one is higher than this one, and this one is higher than this one. That is what we call, that is what I mean by higher high. I hope you understand it. I will use something more better to do this. So but this other one is I know you probably will have a lot of questions because I don't know your the basic knowledge you have yet. So pardon me if I'm going too far. Just by the type of question you ask, I will then know what to do. So this is so as you can see, this is what I mean by higher high, higher high, higher high, higher high, which you see what is happening here. This one is this one is higher than this one. Let's say that this one is this one is this, and this one is this, which is higher than this one. So now you see what's happening here. This market from here, there was no higher high again. The market starts going down. The market starts going down. So from here the market starts going down. You see, there was a break of structure. You see this place that's supposed to be a okay, you can see it from here. This high, this lower or this high, now this market came here and break this structure. You see it? There was no high again. The market starts coming down. The market starts coming down from here. The market starts coming down from here, and it starts forming lower low. Starts forming. It's no longer forming higher high, but now it's coming down. Now it's coming down. You see, instead of higher high, you see this one is lower than this one. The market starts coming down. So that is what I mean by higher higher and lower low. So with time you will understand all these things. I'm just testing your knowledge because we'll go deeper with time. So let me higher high and in Forex. Okay, you see it. I want to look for someone like okay. Okay, you see this is you see this picture here. This is an uptrend. See it, uptrend market. While the market is forming high, the market come here, swing down, go up. This one is higher than this one. It come down again, it go upper. This one is higher than these two. It come down again, go up. Then when you see this happening in the market, you know that the market is an uptrend. It's going up. You see higher high. It's forming higher high. Now you see what's happened here. The market did not form another high here, so but instead the market come down to this floor. See, the market come down here. You see, and if the market fails to produce another high here, you know that the structure of the market has changed. The condition of the market has changed. Now we'll be thinking, does this market, or do this market want to start forming a lower low? What is happening now? If you wait, you see what happened here, how a trend ends and how a trend starts. Now if you see this higher high that is forming, like what I was showing us, what I was showing here, this higher high, what obstruct this for it to come down here, although it better continued, but if you can see here, the market better start coming down. So by the time you start seeing this break of structures, you know that this uptrend is about to end. I don't know if you understand what I'm trying to say. So now if you come here, if you come in this illustration, it says how a trend starts and ends. From the beginning, if this is an uptrend, from the beginning you start forming higher high, which is HH, higher high, higher high, higher high, higher low, higher low. See, this low is lower than this. No, this way is higher than this one is higher than this. So when the market wants to change, once the market wants to change structure, you see what they say here: end of uptrend, start start of downtrend. You see this uptrend here, this is break of structure. All of a sudden you see the market will go down. The market is that this low that is formed here, the market will then pass it. The market will come down below it, which you know it have not happened before. The markets have not passed, like this one did not pass this one did not pass this one. But you see what happened here, instead of this one to stop here and continue to go up, it break this, that is break of structure, it break it and it come down here and it form a high and it's going down. Now this high is not higher than this, the previous one, unlike here. You know, each one, we see this one is higher than the previous one, this one is higher than the previous one, this one is higher than the previous one. Then you see that it is an uptrend, the market is going up. But now see what happened, the market break here and the market is going down. Now in the chart, when you see this, you should be expecting to buy. You see what happened in this market. Let's say you are buying, you bought here, and we buy at the end of each swing. At the end of each swing we buy. Let's say you want to buy now, you wait for this market to bounce here, you buy, the market comes here, come down here, because it's an uptrend, because you see a higher high, you can decide to buy again on seeing this. Then you buy from here. When the market come here, the market retrace, you can see okay, it have not tampered with this, you can also buy here. So but when you see this break of structure and see this, what you should be then expecting is to sell, not to buy. I don't know if you get the point. What you should be expecting now is to sell, not to buy. Just like here in this chart, you see the market come down, this market break the structure and the market bounce back, and this high is not higher than this. You can consider this as a high. This high is not higher than this. You can buy from here, and because you have drawn your zones, like I said, the market move from zone to zone. You know, when we drew these zones, then your target should be the nearest zone. Remember what I said before, your target should be the nearest zone. But sometimes somebody may take this and consider this as a zone. You know, consider here, or not as a zone, consider to take the profit here in case of any necessity, because this is market, anything can happen. So you can see the market pull back. This one is not higher than this. Somebody can sell here to target here, but you see what's happened, the market was unable to come here. Instead it did this and it bounced back. So from here again, the market bounced. Once the market bounced the zone, it is reversing. Like I said, the market is moving from zone to zone. So that is what is happening here. The market is moving from zone to zone. The market is moving from zone to zone. It started from this zone, now it's getting to this zone, but it touched this zone, it reversed, it's still here. So the market is moving from zone to zone. We have many things to study, so watch this video. If you understand it, let me know. If you are many if there are some things you don't understand, let me know. Forex is a journey. We have many things to do, how to take a trade, how not to take. I'm just showing you the it's practically among the basics though, the higher high, higher low, and all that, you know. So I believe some of the terminologies that I'm mentioning, you are at home with them. So this is the daily time frame. You can see what is happening in the daily time frame. I will also show us or show you patterns. You know what we have: the head and shoulder, double bottom, and double top. Whenever you see a double top, the market is probably, I'm using the word probability based on this is the market, anything can happen. When you see double top, the market is coming down. When you see double bottom, the market is going up. When you see a double top, the market is probably coming down. Double top, market is probably coming down. So watch this. I know you have questions, then ask your questions. Then from the next video, we will make adjustments to know what and what we should be doing. Okay, thank you so much, and I wish you the best.